Good morning, good afternoon, and good evening to all of you, depending on where you're watching us from. And welcome to the Iron Influencers Fireside Chat, where we speak to the sharpest minds from the world of capital markets. I'm your host, Giovanni Amodeo, and today with us, we have James Tannahill, who is President of Private Equity at Plocamium Holdings. And the topic of today is how to drive value creation. So thank you for being with us, James.
Thank you for having me, Gio. It's a pleasure to be here.
Great. So maybe let's start with your background first and then your role within Plocamium.
Sure. I am president of Plocamium Holdings, and my background, I've spent a couple years in equity research. I spent a couple years working for large investment banks, and now I'm working on value creation for private equity. And Plocamium is a newly established platform, but our parent company has been around for about 70 years, and it's an extension of a family office that my grandfather set up decades ago to focus on investing and operating companies in the portfolio.
So you talked about a newly created platform. What was the intention when the platform was created?
The intent was to have an in-house value creation platform versus using third-party service providers. And in doing so, we realized that there is a market for being a third-party specialized service provider to private equity. And so Plocamium has taken a turn to capitalize off of consulting services as well as being backed by a family office. So we're a hybrid private equity firm is how I like to characterize ourselves.
Perfect. So let's think about the way the industry is transforming, and everyone is talking about value creation. For you, what are the three main pillars of the process that you work with?
Absolutely. Yeah, value creation certainly is a process, and I would characterize our three pillars as firstly, we go in and do a diagnostic and audit of a company, a business that's ongoing that might be the subject of an acquisition. We go in and provide an audit of the operations, of the overall strategy, accounting functions, and for instance, if it's a manufacturing facility, all the types of tools that are in a factory. Number two, we go into a traditional strategic planning phase where we understand from the diagnostics as the input to the model, what can we do to create a better output, a better value for the company? And then thirdly, we implement the strategy and then we monitor this strategy on an ongoing basis as part of our engagement with the client.
So think about the three phases. What could be a red flag that you normally encounter? And then when would you say no to a particular business and why?
There are red flags all the time that we encounter, and thankfully they come early in the process so that the amount of human capital that we dedicate to a project, it isn't all for waste. And I would say our diagnostic approach helps us identify red flags early on and then address them either a go or no go scenario with a particular company. We do site visits, we walk through factories, we shake hands, we meet people. We really get ingrained in a company, and red flags come pretty quickly after spending a week or two at a client site. And after that point, we're able to come together as a team and figure out, is there a strategy that we can actually put in place to fix a particular inefficiency or problem in a company? And sometimes, frankly, the people are the problem in a business, and you can't really replace all of the people in a business and still have value. So in those cases, we do sign off. It's rare, but it has happened on a small number of occasions.
Are you prepared then? Because if you, let's say you like the product, you like the market where the company operates, but sometimes the people are not the right fit for the company. Are you prepared to spend time or more time doing yourself the job and then putting in people, or the management comes first and then you can work around with the manager? with the product and then the market?
So one thing that Plocamium does well is we have a great toolbox of operating partners and advisors. So for instance, if there is a people problem at a business, we're able to call upon some advisors that work with us very closely to identify, can we coach? Can we develop a human strategy where, you know, there's a solution based on bringing in a experienced operating partner or working closely with an operating partner to coach a CEO to become, more holistic or look at things the way that we think they should be looking at problems. Um, so I would say we do rely heavily on our operating partner base and that deep bench of expertise that we can provide companies. Aside from capital, we deploy operational expertise. Um, so that's our hybrid model coming to life is not just the capital side. It's we can coach. We are coaches. We're not the smartest people in the room, but we have a lot of experience in the room, and we want to sort of add that as the company's progressing. We don't want to totally shake up a company, but we do need to put oftentimes an expert into a company to help the company get to the next level. That's just one of the many levers that we have at our disposal.
Think about the skills that your team has and the skills that an advisor or a third party has. Are they similar? Do they differ? And if they differ, what are the differences?
Well, just from a personal point of reflection, I don't have decades and decades of experience. I have about 1 decade of experience. And so knowing, my strengths and my weaknesses, I think is key to being a successful leader in the value creation space. And some of the operating partners on our team have 20 or 30 years of experience under their belts. And so I acknowledge that. And as a team at Plocamium, we are able to accept the weaknesses that we might have and complement that with a strength that we bring in. And so then our whole bench is pretty much strength and not weakness. Whereas if I were the only person involved, for instance, in a project, there might be some weak points, being that I haven't seen everything. But over time, we fill our ranks with people who have seen most of what could occur in a business situation. And so we really build our strength by having the right people on our team. And we have a very deep toolkit to do this. So we're very thankful to our operating partners and other team members that come on board and help us see solutions to problems that we might not see as is.
If you were to hire new people, what kind of professional skills would you look for, considering the way the market is changing?
Well, Gio, I would say somebody who understands strategic planning, who understands, firstly, building relationships with stakeholders at a company, irrespective of if you have a economic credential that is in finance or management or whatnot. I don't really look at that as an indicator of success in value creation. I look at success in value creation as somebody who can put on a shirt, walk into a factory, shake hands, and come out with a whole list of notes on, here's a process improvement that we could potentially, implement, or, these 3 people came up and said, hey, there's a problem when we're working on this day in and day out. We think that this could be changed, and then our jobs could be all the more easier. That's sort of the skill set that I value the most. So I think people skills is number 1 in value creation. Number 2, you can learn how to crunch the numbers. So if you're teachable, that's fantastic. And thirdly, a willingness to be, open-minded and approach problems with emotional intelligence. So the EQ factor as well. Everybody in the room, except us at Plocamium, has been operating the business, for instance, and that might be their entire career. And then we come in as an advisor, and we don't want to shake it up too much too quickly. So understanding the perspective of the management team and the workers in the factory is of utmost importance to gain their trust, and that will lead to the best outcome ultimately.
So you talked at the beginning about being a hybrid solution between private equity and value creation advisor. When do you wear the private equity hat and when do you wear the consultant hat, or are they both blended with each other?
They both are complementary, and we wear the consulting hat as we're going through the diagnostic phase of value creation. We want to walk a factory floor, identify processes that could be enhanced, and also identify things that are working correctly. We put on the investor hat when we're in the boardroom. We understand things from the capital lens as well, but we also come at it with the consulting hat, meaning we understand the processes, we know how to use the equipment, we know how to build the product, but from a financial point of view, our investor hat really does come to play. And as investor operators for over 70 years, we've been able to invest in and operate companies simultaneously. So we'd like to wear both hats. Oftentimes we don't wear them at the same time, but it's in the playbook. We start off with the consulting hat, and then we eventually, as we're monitoring a investment, that's through the investor hat, the investor lens.
Maybe let's take a step back. And what kind of businesses do you normally work on in terms of size, geographical reach, and then also characteristic and sectors?
Yeah, so within the size range, everybody has their own understanding of what the middle market means. And to us, our definition is a company that has an enterprise value between 10 million and 250 million US dollars. We're not going to stay tight on the 250, it could be 350, but in just from a pattern recognition point of view, something between 10 and 250 million dollars enterprise value is a middle market company. We focus on companies within the healthcare sector, and that means biotech, that means healthcare technology, that means healthcare services. We also have companies that we've invested in and consulted with in the defense sector, specifically national security technology. And from a family business legacy, from our 70 years operating companies in the manufacturing world, the industrial sector, containers and packaging, is sort of the third niche that we have under our belt and within our wheelhouse. Across the US and also Southeast Asia, as well as the GCC region in the Middle East.
What are the differences in the approach? And it's interesting, the GCC versus the US. Do you have to have a more hands-on approach, or what are the main differences?
Well, as we know, as you know, and as guests on this podcast in the past have pointed out, there is a shift in private equity landscape right now, and it's not just North America. There's, as being a leader in private equity deals, the Middle East, Qatar in particular, and Abu Dhabi have been leaders just alongside KKR and Blackstone and some of these other large private equity firms in investing in a whole host of companies. And so when you're doing work, you have to be locally present. And in essence, we can't do all of the work in the Middle East from an office in New York. We have to be on the ground, and it's building that trust again. And I think regionally speaking, face time is super important in the GCC, and endurance as well. It's not an in and out one deal and then we can add the GCC to our roster. We have to have multiple deals going on. We have to show that we're very involved in the region and that we respect the customs and just the wider geography. So it's a cultural nuance, but I would say, to sum it up in a short phrase, locally present is an important factor. So just being aware of macroeconomic factors in the region and how that might influence a deal, that's done well for us in our 3 years in the region. And hopefully we have 3 more years to go.
And would you consider other geographies, or for now, that's the focus?
That's the focus. Southeast Asia, North America, and the GCC. Vietnam is an emerging destination for private equity within the sectors that we focus. And again, being locally present there is important as well. And from a manufacturing mindset, there's a lot of manufacturing going on in Vietnam and a lot of deals in the process across private equity. And we're evaluating a handful of opportunities globally across those three regions.
And what kind of insights do you get when you analyze all the businesses that you are either working in or dropped and didn't work in? What do you do with that data?
Well, I think that's a really important question about how do you manage data at a firm level? And we are a smaller firm when compared to the KKRs of the world or the large sovereigns. And from our data lens, we might see 100 deals a year that come through our desk, of which we engage in 10 of those deals actively. We do maintain a catalog of all the contacts and all the information, and it's in a Tableau format. So we like to manage our data visually at Plocamium because we are a data-driven firm. And so we do track things, and we like to follow up on deals that even we might have dropped or just not have been interested in. We do want to follow up year over year to figure out, is this deal ongoing? Who are the parties involved? Who is involved? And this is a proprietary data set that we benchmark different metrics from. And everybody at the firm has access to a visual dashboard with KPIs. And it's been very useful for us. And there's certainly probably a way to monetize this data set, as certain firms have been doing. But we're still in the process of looking at that.
So think about all the deals that you work in. Would you consider then only work on deals where you would put your own money, or can you keep the two things completely separated?
That's a really wonderful segue into our firm structure. Being a hybrid private equity firm, meaning we do both the consulting work and investing work. The way that I've structured Plocamium is we don't invest in companies in which we're providing consulting services to. And so to answer that question is, most definitely we would not work with a company that would fail to invest our own balance sheet into. Frankly, we're a small firm. We have limited resources. And of the $800 million that we've invested, every last dollar, we don't regret. And each dollar that we stick into a company, frankly, goes through a pretty rigorous diligence phase prior to investing, and we're very confident we stand behind it 100%. But yeah, we do have a longer diligence process just because we have limited resources, human capital being one of them, and then obviously, since it's our own balance sheet, the capital turnover is a little slower than if we were dealing with LPs and whatnot. So we operate a little differently, a longer time cycle, longer deal cycle, rather.
So a few final question as we are approaching the end of the discussion. Do you think that the mid-market space is becoming more crowded? And if so, what's the best way to identify your niche?
I do believe the middle market is becoming more crowded. Before this call, I was on Bloomberg and I looked at the number of M&A deals year to date over the last 5 years. And by quarter, 2024, we've seen less deals than 2019 and 2020 and 2021, although marginally fewer deals than the last few years. I don't think we can look at the deal volume as being indicative of a slowdown or a speed up. I think we're sort of chugging along as normal. And frankly, the advent of AI and things like that, there's so many companies coming to market looking for capital, and don't have products yet. We're not in the business of providing capital to a company that does not have a product. Some of our competitors are. And so I think defining yourself as a business through having a real product, not a mock-up or a wireframe, is important. And from a private equity perspective, investing in companies that don't have physical products, but if it's a tech solution and it's not actually an operating solution yet, I'm wary of investing in that or doing business with that team. And everybody has their own perspective on that, but it does affect valuations, and there's been a huge inflation in the premiums paid for companies in the tech space, frankly, and it's egregious in some cases. But we like to identify a real product that's being made by a company and not something that's a boardroom presentation. So that's sort of the first diligence checkbox on our list. So to define yourself well for us, you have to have a product that works on its own power. So
Another question is around the brand. What does the Plocamium brand mean now, and what should it mean in the future?
it means sustainability now, endurance, and resilience. And I think it should mean the same thing in the future. To be honest, we're named after a marine organism, red algae, and it's one of those organisms in the ecosystem that is silent. It's not the loudest voice in the room by any means, but without it, there would be no voices in the room. So it's able to thrive in challenging and dynamic environments, and we're hoping that we can continue to thrive in the dynamic markets and operate in the challenging sectors that we operate in. So that's sort of our mission now and for the future.
You talked earlier about the hybrid role between private equity and consultancy. Would you consider later down the line adding another strategy, for example, private credit, or this is completely outside your remit?
If we were to add private credit in a new, product platform, I don't think it's entirely outside of the scope of what we could do. It would be a big lift. And I do feel that the trend right now in private equity is being a direct lender and having these alternative financing structures. So I think for us to remain competitive in 2 years' time, let's say, we may have to start evaluating additional platform components aside from consulting and off-balance sheet investing. And I think we could actually be a direct lender through a private credit route. Certainly, that's something that we're open to investigating with the right partner, either an existing platform that we bring in-house, or we do something bespoke from the ground up. So to be determined on what we do, but it's certainly something that's in the crosshairs for evaluating.
Final question. Imagine you have the possibility to invite someone for lunch to be inspired by. Who would that person be?
I think that person would be Elon Musk, somebody who's alive and somewhat well, I would say, these days. Though I want to understand what's beyond Earth and how do we invest in something that can take us out of our solar system per se. I think that's just fascinating. We invest in things that are with us physically right here on Earth. And I think the concept of investing in something to take you outside of Earth is mind-boggling. And I would love to ask him, how do we get there?
Great. James, thank you so much for your insights, and thanks everyone for listening.
Thank you.